Here's how to buy a house with no money down. So when I started my real estate career, a huge portion of my client base, actually 80%, purchased with one of these programs I'm about to tell you about. And not only did they buy with no money down, but they usually left closing with a check for their earnest money. So how did they do it? Well, you need two things. Number one, a loan program that requires zero down payment. There are 3 of them that I'll tell you about in this video. And number 2, seller paid closing costs. Now, over the last couple of years, the market has been so crazy with such high competition because interest rates were so low that getting the seller to pay for your closing costs was laughable. That's not going to happen when you're competing against a bunch of other buyers. But now, the market in many areas, the Charleston market being one of them, has slowed down to the point that seller paid closing costs are a complete possibility. And this opens a lot of doors for people who just don't have that access to cash. All right, so the first thing you're going to do is get pre-approved for one of these 3 main loan types. So the first, if you're a veteran or currently serving in the armed forces, let's look into VA loans, of course, because those do not require a down payment. The second option is a USDA loan. These are through the United States Department of Agriculture, so you do have to be purchasing in a rural area. That's the purpose of the loan type, is to help people that live in rural communities buy homes. So if you're curious if the area you're looking at would qualify, send me a message and we'll look into it. To qualify for this loan, you also need your typical credit, income, all of those things, but you have to make under a certain amount as well, because these are for lower income families. The third option is to purchase with down payment assistance through a state program. So in South Carolina, that's through South Carolina Housing. And this typically works as a secondary mortgage for the down payment amount. So let's say you're purchasing with an FHA loan which requires a 3.5% down payment. But instead of having that 3.5% yourself come out of your bank account, they give you another loan for that 3.5%, and there's no interest or payments on that 3.5% loan. So it can be a little complicated to understand. If that's something that you're interested in, if that's the one you qualify for, your lender will break down all of the facts and figures so you can understand that loan in a greater detail. But it's definitely an option. Again, if you make under that income amount, those are also, down payment assistance is also for lower income families. So those are the 3 most widely used no money down type loan programs. Now, little disclaimer, of course, you have to qualify for the loan. So you're going to need the credit required, the debt to income ratio required, employment factors, et cetera, et cetera. The other thing to keep in mind for any of these government loans is you do have to purchase a home that is essentially pretty move-in ready. So you might need to paint, but you're going to have working plumbing, working electric, your appliances in, like those sorts of things in order to make the loan work. You're not going to want to have, any big foundation issues are not going to work. Things like that are going to be a requirement for those loan types. This is something that I really specialize in. So if you have any questions regarding government loan types, please, reach out. We can talk about it more. And then I can put you in contact with a lender as well, who's got a lot of experience with these and can really help figure out if you qualify and what you'll need to keep in mind for those qualifications. So that's step 1, getting a loan type that does not require a down payment. Step 2 is closing costs, because when you purchase a home, in addition to your down payment amount, you also have closing costs on the property, and those are typically around 2%, give or take, of the purchase price. So in order to not have to bring the money for those closing costs to closing yourself, we're gonna want the seller to pay for them. So like I said in the beginning of the video, this was a hard thing, really an impossible thing, completely impossible thing to do for the last couple years, because the market has been so insanely full of competition. It's been such a high seller's market. But as we start to see the market balance And we see homes stay on the market for quite a bit longer, and maybe sellers have different expectations on how things would go. Maybe they listed their home too high. We see opportunities where we can really swoop in and get those closing costs covered for you. So for most of these loan types, you can ask the seller for up to 6% in closing costs. Vast majority of the time, that's going to cover all of your closing costs. And then last two little things to make sure that you have absolutely no money down, your home inspection. So that price, depending on the property and size, etc., but on average, it's about $500. We do have home inspectors that will allow that to be paid at closing and could be factored into a seller paid closing costs. You could also, of course, pay them up front, and then you're only spending $500. But outside of that, the only other thing that you'll need is your earnest money. Now, I have, again, the seller has to agree to it, but I have in the past been able to get away with as little as $500 or even $100 in good faith money. And then at the end of closing, that money comes back to you. So when you close, you get that money back. And when you're bringing money to closing, it would typically, just be subtracted from the amount you're bringing. But when you're not bringing any money to closing and the loan type allows it, you get a check for that money back. So that's how a lot of my clients would purchase a home, and they'd get a check for their earnest money, whether that was $100 or $500 back at closing, and quite literally buy a home and walk away with a check. Now, that is one heck of a deal, especially considering you have to live somewhere. And if you're renting, you're usually going to need a deposit, and even first and sometimes last month's rent. So let's say your rent is $1,500 a month, you're looking at definitely $3,000 in most cases to move into that apartment. So the fact that you could purchase a home for far less than that, start building that equity, is incredible. And then that opens so many doors for you when you go to sell the house in the future, and you've got that equity to look at. It can really open doors. I've seen it open doors for so many of my clients. If you have any additional questions about this, or more importantly, if you're like, heck yeah, Lauren, how do I do this? Reach out to me. If you're not looking to buy in South Carolina, please still reach out to me, because this is kind of a complicated, tricky thing to do, and you want to have an agent that knows these programs, knows what they're doing, works with lenders that really know these programs inside and out. And I can find you an agent and refer you to someone in your local area, no matter where you want to buy in the United States. So thank you so much for watching, and I'll see you next time.